Welcome in this sessions. Just today, we are continuing the chapter accounting for merchandising operations. Okay, in this session, you are most welcome. We are following this book, Accounting Principle, Weygandt, Kimmel, and Kieso. And now we will discuss on comparing multiple steps with a single step income statement. And this is learning objective 5. Multiple step income statement is a show several steps in determining net income. Several steps, one more steps. Okay, number second, two steps related to principal uh, operating activities. Distinguishes between operating and non-operating activities. There are three features of multi-step income statements. Okay, later on we discuss more in this regard. This multiple steps income statement. Number one, this is the net sales and gross profit sections. Okay, and this one operating expense section, this one non-operating expense section. Okay, so here just one after the another we will discuss it. This is the net sales. PW audio supply income statements for the year ended December 31st, 2017. This is the sales, that means sales revenue less sales return and allowances and sales discounts. So after subtracting, we are getting these figures, and uh, this is the cost of goods sold. This is the gross profit. Okay, this is also gross profit section. Now operating expenses, and these operating expenses, just this 336 are operating expenses: salary and wages expenses, utilities, advertising, depreciation, paid out, and insurance expenses. Six items are related to operating expenses, and the total figures 1,14,000. Okay, this is the aggregate figures, and after subtracting this figure, we are getting income from operations. Income from operation. Now non-operating activities. The two section, number one, income from operations, other revenues and gains. Income from operations already finished 30,000. Others revenues and gains, and others expenses and losses. And under the other revenues and gains, we have two items: interest revenues and gain on disposal of plant assets. Total $3,600, and others expense and losses. Under this subhead, we have interest expenses and casualty loss from vandalism. Okay, that's so total 2,000. After addition these two figures and subtraction this figure 2,000, we are getting net income. And which items are included revenues and gains and others expense and loss. That means others revenues and gains and others expense and loss, we have a lot of items. Just categorically we will see these items. And this is the others revenues and gains item and others expense and losses items. Okay, the revenues and gains, interest revenues, dividend revenue, rent revenue, and gains. Others expense and losses, interest expenses, casualty losses, loss from sale of abandonment of property, plant and equipment, and loss from strikes by employees and suppliers. Okay, this is the net income 31,600. Okay, next slide. Multiple step income statements. The multiple step, just this is a question. I am offering this question to my learners. Multiple step income statement for a merchandiser. Please look this matter again. Multiple step income statement for a merchandiser shows each of the following features except which one would not be corrected here. So gross profit, yes. Cost of goods sold, yes. Revenue, yes. Investing activity section, no. So this could be answered. Single step income statement, this is very much easy to understand, very simple. There is no multiple or no section here. There's two section. One section is revenue, another section is expenses. Subtract total expense from total revenues. Okay, two reasons for using the single step format. Number one, company does not realize any profit until total revenues exceed total expense. Okay, does not realize any profit until total revenues exceed total expense. That means revenue must be exceed from total expenses here. So no problem to the management of the company, to the owner side of the company, and format is simpler and easier to read. Okay, so this is the factors, this is the matters. Income statement for the year ended, uh, revenues section, total revenues, this is expense section, total expenses. So after adding these four items, we are getting this figure, the net income, this figure. Okay, no problem here, very easy to get. And balance sheet, this is the classified balance sheet, current asset, this one, account receivable, this one, inventory and prepaid insurance. So this is the inventory. Just in this chapter, inventory is the main factor. So how could we get this inventory, and what is the actual treatment of this inventory? So this is the balance sheet, current asset side. We can show this inventory. Okay, and this is the property, plant and equipment 80,000 and less accumulated depreciation equipment 24,000. So total asset this one. Okay, total assets. Now financial statement classifications indicate in which financial statements and under what classification each of the following accounts would be reported. Accounts payable, we know financial statements classification. Accounts payable, which item? Accounts payable balance sheet, accounts receivable balance sheet, accumulated depreciation balance sheet, accumulated depreciation equivalent balance sheet, advertising expense income statement, building balance sheet, cash balance sheet. Okay, so this is the balance sheet and current liabilities. And you can see here, this is easy to understand, thus I will not explain it more. And now depreciation expenses equipment, this is income statement, write out income statement, gain on disposal of on plant asset, others revenues expenses, insurance expenses, this is also income statement item. Interest expenses, interest payable, this is balance sheet item. Inventory balance sheet item, land balance sheet item, notes payable balance sheet item, and this is the long term liabilities. Okay, so you can see here, this is easy to get, I think. Everybody can easily get this item. Okay, so owner's capital, owner's equity statement and beginning balance, owner's drawing, owner's equity statement, deduction section, property tax payable balance sheet, current liabilities, salary wages expenses, income statement, operating expenses, salary wages payable balance sheet, current liabilities, sales return and allowance, income statement, sales. Just I am reading out as a news reader. Just here you will not get any others difficulties, inshallah, I think. Here, this is our last slide, and this is thanks to everyone to attend this section.